Oh man, after 5 days of red, Bitcoin is up 1%, but is this just a huge bull trap? We are hours away from Jerome Powell delivering a speech with Q&A later on today. That's 12:40 EST time. We will be streaming that. Will he rug pull markets? In order to understand exactly the likelihood of what's going on and what I think could be happening later on today, we need to understand where we're at in this market. Smash up likes, don't forget to subscribe. Let's get straight into this to unpick what is going on. We've had huge amounts of volatility this week, and it started from Thursday last week. You can see obviously on Wednesday we had a really big strong day, 2.6% up on Bitcoin, and that was the FOMC day where Jerome Powell came out, delivered his 25 basis points, and came out very dovish, and the market saw him as coming across very dovish, saying that the disinflation process has started. It was gratifying, was the words he used, to see that inflation was coming down whilst job market didn't have to deteriorate more than needed. He was happy with that. But then look what happened. We had a very volatile Thursday as the markets saw the earnings from a bunch of tech players, right? We had poor earnings from the likes of Google, Amazon, these guys, Apple, and then we saw more worse days. On Friday, what did we get? We got the horrible non-farm payrolls, a really big miss, to the level of which we've not seen in many, many years. It was a record miss, showing that more jobs were being created and it was becoming easier for employers to hire. Now remember, we spoke about it at the time. That could lead to the potential risk of a wage price spiral. I did make a video, however, explaining why the labor market could still be healthy and yet Jerome Powell could still be happy with what's going on. We have to remember, there are two sides to this argument. On the one side, you've got people who want Jerome Powell to go ahead and do the Paul Volcker approach, which is keep hiking interest rates well above the inflation rate and crash the economy into a necessary recession in order to get rid of that stubborn inflation. On the other spectrum, on the other side of the spectrum, you then have those people that think, hang on, you can actually navigate a soft landing, which is what we're seeing being approached right here. And Jerome Powell's always said it's a narrow window, but it is possible to get a soft landing, which is where he's trying to bring inflation down, which we're seeing evidence of to his credit, whilst keeping unemployment quite healthy. To put into perspective, unemployment rate is currently at 3.4%, the lowest level since 1969. So if he's able to pull this off, that would be an incredible feat of Fed chairmanship, right? But you have got the conflicting message where people are saying, hang on, this is not healthy. If you keep letting the labor market be helpful, we don't care that CPI is trending down. That 6.5% of inflation that you've got right now could be entrenched and could be spoiled by the labor markets, because if people continue to find it easy to get jobs, continue to find it easier therefore to spend money and drive inflation up. Now, I explained in a previous video last week, highly recommend you guys go and watch that, where I explain why that's not necessarily the case, because as long as wages aren't running out and jobs are being created, but wages aren't getting crazy, that shouldn't feed through to a wage price spiral. So we cover that up. If you made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on SKILLSHARE. For those who aren't familiar, SKILLSHARE is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements, because on YouTube everything is about retention, whereas with a course you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days. If you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it, and let's get back into this video. Jerome Powell's got to come in, and Jerome Powell has got to decide what does he want to do later on today. He's going to have a Q&A. It's going to be with a guy called Rubenstein, who's ex-private equity, knows his stuff. So I fully expect it to not just be one of those boring speeches. Every so often you get those Jerome Powell speeches, which I don't cover off. I don't live stream, because normally he gives a couple of minute speech and then he disappears and it's a nothing burger. But in this instance, I think he's going to get some serious questions. Moreover, if you remember last year, there was a specific moment, I can't remember which month specifically, but Jerome Powell came across too dovish in one of his FOMC meetings. And then in his midweek appearance, similar to the one we're getting today, he came out and he put the markets back in their place. Because remember, he does not want markets to over prematurely start running, right? He wants them to stay in line, because if the market starts celebrating, that in itself will bring the inflation back. Okay, so I think Jerome Powell is going to be quite firm. I don't think he's going to continue to reiterate the dovishness that he showed last Wednesday, but I also I'm hoping he does not rug pull the markets. Okay, I think he's going to be firm. I think he's going to say we've got a lot more to do. We need to be data-led. The CPI reading is on the 14th of this month. We'll look forward to that to see what happens there. And I think he's going to say we need to keep looking at data. I think he'll also hopefully explain what we just explained there, which is it's okay. We can do a soft landing where the unemployment doesn't have to unnecessarily increase, right? We don't need to put people into hardship when we don't have to. If we can keep it where it is and inflation continues to come down, then what are we complaining about? It's only if inflation doesn't start falling, if it starts becoming stubborn, that then he can always rotate the interest rates back up again in order to finish the last bit. Now, the people on the other spectrum are saying, oh, no. If you leave it till then, it will become entrenched. It's going to become so sticky that even if you increase interest rates, you're damaging the economy. You're going to drive us into a deep depression-like recession in order to get that away, because you're leaving it too long and you're not being proactive on it. So loads kicking off here. We will cover that off later on today. Make sure you, if I've not put the thumbnail up already, when I do later on in the next hour or two, make sure you click the reminder button so you don't miss it, because YouTube sometimes struggles with notifications, okay? So that's what we've got there. Another thing I wanted to share with you guys is this. DCG are now officially selling their holdings in Grayscale. This was always a fear. We know DCG have been struggling ever since the FTX collapse. That's not been a surprise. We've covered it off on this channel. But now we're starting to see some selling. And if you do some digging, the selling seems to be from the Ethereum fund, not yet their Bitcoin fund. So they sold about 22 million in a bunch of trades since January 24th, and they're selling at 50% discount. So they're selling at about $8 per share when the actual claim to Ether of what you're buying is $16. So they're starting to liquidate some of their Ethereum fund, which is quite scary given the amount that they hold. I mean, this is one of the biggest players, biggest holders of Ethereum and Bitcoin, and this could be concerning if they have to liquidate large sums. Now, 22 million in the scheme of things is not, but it's an indication of what troubles they could be in, that they're actually having to go to their cash cow and start liquidating from there. Let's now jump back into the rate monitor tool, and you can see markets still currently have priced in 25 basis points for the next meeting. That's firmly what they believe. You got a few percent just niggling here, expecting he's going to pick it up to 50 basis points. I personally am sitting in this camp for now, but of course we've got the CPI data coming out in a week from now, which is going to give us further insight into what to expect. We'll also take a look at Fear and Greed Index sitting at 54, not much difference from yesterday, and the markets are still in that kind of neutral, little bit of greed sort of territory where they're feeling a lot better than they were at 15,500, but it's not clear to them that we're running to the moon. I think that's right. I think we spoke about that yesterday. If you not watched my video from yesterday doing a bunch of TA, make sure you go watch that. But in essence, what I was sharing with you guys is we are not out of the woods yet. Just wanted to reiterate that message. We are seeing a little bit of rejection here from our weekly EMA ribbon, and the bears firmly own this trend. Until we turn this EMA ribbon bullish, we cannot claim to even be moving sideways, let alone into a bull market, okay? This is the bears trend. Even this, look at this. We closed a weekly candle above it and immediately got thrown back down, and the bears continue to own the trend. Okay, so we've got a lot of work to do here, and it's not a done conclusion that we're through. Now, we are seeing Bitcoin up 1.3% now at the time of recording. Let's check in on the dollar index, because this is the other thing that we saw kind of having a nice positive 4 days, and you can see they're opening up with another slightly green day today. Again, if Jerome Powell comes out super hawkish, do not be surprised to see this move with more greenness today. Now, the problem with that is that if dollar index has too much green days, is they could be reclaiming its its daily EMA ribbon, which is not what we want to see here. Okay, so it's very important that we start seeing more risk on appetite rotating and leading the dollar index to fall to the downside. That's very important. So again, keep an eye on this. If Jerome Powell comes out too hawkish, this could reclaim the daily EMA ribbon, which is not great. We want to keep this in a thorough downward trend here on the daily chart. The other thing worth checking in here is our ascending broadening wedge on the 4-hourly chart. You can see we're forming this bearish pattern which can fall to the downside, but what you're seeing here is 3 4-hourly candlesticks showing real good strength here at the bottom of the channel. Now, do not get caught out by this. When you're spending too much time at the bottom of these wedges, be very, very fearful of falling to the downside. Now, a lot of people are like, oh no, we're bouncing, we should be able to head straight back to the upside. Yes, it's a possibility, but a lot of times when these patterns break down, they do something like this, they do that, they back test on this side, and then they break out like this. It's not that they just go, like, it doesn't work like that, right? You do see a little bit of support, the bulls show some strength, and then the bears come back in, and then the bulls, and then the bears win the trend. Okay, generally it's something like that. So be very, very careful. This is, like I showed you here on this example, can break out to, most likely here, can break out to the downside. So do not be surprised to see that. I've shared my views yesterday on when I'll be buying the dip and what those key levels are. So make sure you go watch that video from yesterday. We will be covering Jerome Powell later on today. Let me know in the comments, what are you doing in this market? Are you buying altcoins? Are you buying the dip on any of your favorite plays? I personally will be looking for opportunities this week to buy the dip. If we see any major capitulation or any effects from the Jerome Powell speech, I will be looking at really serious pullbacks towards the daily EMA ribbon generally for me to start nibbling into position. Thanks for watching, guys, and I'll see you in the next one.